So we're going to start all the way from the monthly. Now, why is this labeled a sweep? You might call it a pattern, but it's more like a move price tends to make to show clear intent. We expect price to go down to the downside. We expect price to start to close below lows. If we see price... Okay, so I want to talk about the New Zealand against the US dollar. I'm just analyzing this chart and I want to see if we have opportunities here. So we're going to start all the way from the monthly time frame. As usual, we're looking for demand and supply zones, and when we see one, we'll then check if we'll find the advanced supply zone pulling out of it or demand zone pulling out of it. So on the monthly time frame here, what we can see clearly is we do not have anything close by. We don't have a zone at the bottom, we don't have a zone at the top. The last zone we had has been mitigated. You can see it right here. This is the last demand zone we had. But it was not so much of a demand zone because it didn't break structure. The one we had where structure was broken, not really good structure, but structure was at least broken to an extent, is this one. But it only led to sweep of liquidity, even though it did break some minor structures in between. There is a tendency that this price is going to continue to the upside for a while. We dive into the weekly time frame. The same scenario, the same situation is what we're planning for. But what we ended up having here is quite okay, right? So we have break of minor structure and a pull into it. Now, why is this labeled a sweep? It's labeled a sweep because we have extremely relative low right here. As you can see, these two currency, I want you to put your eyes right up here, monitor the low, the measurement of the lows. So we have 0.56806. and the next one is 0.56807. Now within 2 weeks, price was able to maintain this low long enough, and they were relative. And what happens to equal lows? We know price usually sweeps it. Price sometimes goes through it, but some other times it sweeps it for liquidity. So we've seen price sweep. And why do we call it a sweep? Well, price went in and immediately came out of that zone real fast, so it's basically a sweep to us. Now when price made this sweep, price is pulling up to the upside very hard. So this is our supply zone, and we can see price is currently within that supply zone because it led to this sweep. Now at the same time, we also have a demand zone directly beneath it, where price is severely mitigating right now. So we may see price pull to the downside before it push upwards to complete this sweep and make it a liquidity run, or rather stop run. Moving down to the daily is where we start to look for both zones and, should we call it pattern, or looking for a particular way the market should print price for us. You might call it a pattern, but it's more like a move price tends to make to show clear intent, in our opinion. Now, what am I saying here? So what I'm seeing here is this. I'm seeing price finally moving out of the zone, creating good demand zones. As you can see, we have good demand zone here and we have a good supply zone on the daily time frame right here. So this is a very good supply zone for us on the daily. I want to make sure I'm touching the right thing. Yeah, this is it. So this is a good supply zone on the daily. I decided to mark out the whole thing, those two candles, and we can see how price is beginning to mitigate inside here. Now, first thing first, right? We expect price to go down to the downside. We expect price to start to close below lows. If we see price closing below the low, we have much more belief of price kind of push to the downside. Now, we're not saying price is going to push all the way to the bottom. We're saying price is going to push at least to the last resistance, which is right here. So we may see that push soon, but we're not certain. As you can see, there was no push to the downside when this was mid. So what we're waiting for is seeing if price would close below and we'll get that push to the downside. But then we go into the 4 hours. Now, this is where we apply some other logics to the RSI, to basic RSI. It's not a miraculous indicator or anything. It's just a standard trend index measurement tool. Now, what do we have here? So we see market seriously grinding to the upside and making very beautiful market structure, constantly pushing. But we've seen something that looks like this is most likely the end of the push. It doesn't mean the push is going to suddenly stop. It's just said it's most likely the end of the push. And why do we say it's most likely the end of the push? So if you look up here, prices, when price made this high, price has constantly failed to find its way above this high, and this is now becoming a sweep. So price closes above it, then it becomes a break of structure. For now, it's sweeps, basically sweep, and this is where it becomes terrible. So if price should find its way below this low, this marked out low we have here, we know that we have now fallen into a change of character. So this would start to look like a change of character. When price breaks this ones and this one also, we then have a change of character, and we'll be waiting for one thing at that point in time, waiting for price to return in so that I can sell to the downside. Maybe not sell all the way to the bottom, but at least sell it all the way to the first zone. So this would be the target one, this would be the T1, and then if price continues, obviously we know that the T2 is going to be right at the edge, which, as you can see right here, we have another equal lows waiting. With the equal lows here, this looks like something price would most likely be drawn to, and after this we have the zone next. So we'll be taking a trade, or I'll be taking a trade, depending on what market does on these levels. But then again, before we even start drawing conclusions or saying that this market is most likely going to go to the downside, let's dig in just one time frame deeper. And what we see on this one time frame deeper is something that we've seen multiple times anyway. We can see how price tends to dip below the 50% of the RSI constantly. Over here we've seen it dip the first time, now we're seeing it dip again, but this, unlike the first one, it only dipped once and continued to the upside. This time what we're seeing is multiple dips at a go, and price seems like it has all intent to pull the downside. If it does push to the downside, again, these are the lows we're looking at, every low here, and you can see that they are mostly relative lows. They are mostly relative, very close to each other. If price should make that break below, then we'll start to look for pullbacks to start to aim for the T1, the T2s, and the T3s. Just to make it clearer, I'll take out all those ones so you can see it. We'll start to aim for the T1s, the T2, and possibly the T3. But all of this is just markets, one assets, and we're just speculating as usual, which is what forex trading is all about. It's all about speculations. But to back it up, let's see if we have fundamental stance that will give us that. So fundamentally, this market has way more neutrality in it than expected. Anyway, but the key data, when you add up the technical situation with it, it's 60%. That is quite bullish, 60%, really bullish. Then we had the data without technical analysis involved is about 55%, which is also to the bullish side. Then we have the all news with the technical data is literally flat line, and then all news without technical data is where we have a bearish situation. So we are in a situation where I'd say the market is slowly beginning to show signs of small weaknesses coming up little by little. It usually starts from the alt news without technical, and if we see growth, it usually starts from here. If we see what is it called, depreciation or regression, it usually also starts from here, and then it moves and trickles down into the rest. As long as this continues to stay bearish, this will slowly tilt over time, and with this tilting over time, this too will slowly start to tilt over time. But let's take a look at what's been really happening for this market right in recent times. The pink line is the price close, and the blue line is the daily record from the system. That is our system, this particular trading tool I have here. Now what I have here is this market was bearish at some point, managed to become bullish, and now just recently broke above its own 9 days moving average, trying to push to the upside. So we kind of fundamentally we have reasons to be buying severely, right? We have reasons to buy. And I can see it here again, fundamentally there's a reason for us to be buying. But I also want you to pay attention to one thing. Even if it's saying that we're going to be buying, right? It doesn't mean the market is just going to continue a daily run to the upside, right? We may have, from what I see here technically, we may have that pullback into this first one, and we may see that rally to the upside before we start to see any clear actual push to the downside. That is what I'm seeing here based on seeing the economic data and the way it is and everything. So this is my take on New Zealand against the US dollar. I hope you did enjoy it. If you did enjoy this knowledge, please hit the subscribe button and share this video with someone who you think may find the knowledge valuable to their own trading career. Without further ado, tell you thank you for watching. See you all in the next one. Peace.